Hey guys, welcome back to our show, Passion for Real Estate. This is your host, Cris Del Cid, alongside
Nestor Gotay with Realty Concepts Group. Christian and I, we are licensed real estate agents in the District of Columbia, Virginia, and Maryland.
Guys, thank you so much for being here with us today. Is our fifth episode.
It's our fifth episode. Guys, you know that we've been talking about the process, we're trying to streamline the process of buying a house. We're basically talking a little bit more to buyers instead of sellers. More information for sellers is going to come in the next season. But so we talked about the market update, right?
Our first episode was, we gave you a market update. We gave you some market data. And it led us to the second episode.
That was the credit, income, and assets,
which was our CIA episode. Remember, guys, you heard it here first.
Exactly. CIA. That's what we came up with. So it's something that we try to make it interesting for you guys. CIA, credit, income, and assets. That is gave you a little bit of idea how you can get qualified for a loan.
And then our third episode was on home inspections. It was a very important subject to touch on, and everything you need, well, mostly the important things that you need to know about it.
Exactly. And then we talked about appraisals and how important it is for you to find out the price of the home before you actually buy it.
Definitely. And that brings us here to the closing. We're going to touch on two important points here.
So we're gonna talk about closing and why it's important, right? So why it's important for you to be informed before you actually get to closing.
Correct. And something that I learned today, which Nestor brought up, was CFPB.
All right, guys. So CFPB is a U.S. government agency and is the Consumer Financial Protection Bureau. They're in charge to make sure that banks, lenders, and other financial companies treat you, the customer, fairly. Right? So basically, we're going to get a lot of information from CFPB, and their website is consumerfinance.gov. So you guys can go to that website and get more information as well. But we're going to talk today about closing disclosure.
Right, and that's tied in with your mortgage for the purchase of your home. And some information that Nestor didn't break down to you guys that I just found out, like I said, was CFPB is not only just for mortgages, it covers all different type of consumer loans. So there's great information on there, guys. You go up there and check out their website. We're pulling this information directly from their website. Now, as you mentioned, the closing disclosure. What is the closing disclosure? The closing disclosure is a 5-page form that's given to you, the borrower, 3 days before closing, for you to check for any changes, make sure everything's right. Also to see if there's room for you to make some changes, and that's why you have that 3-day grace period. Right before closing. So once you get to closing, you're going to sign another one. And Nestor right now is going to go over on what's included in
the closing disclosure. So, and why we're talking about this is because we have heard from different clients, friends, family members. Like when I get to closing, I see my terms have changed, right? So CFPB makes sure that you, the consumer, is protected, that no terms are changed before closing, that you are aware of what is it that you're signing at closing. Hasn't that happened to you?
I've had a few cases, and it's very important for the borrowers not to be in the dark about it. And so we're bringing this to light now. Is your closing disclosure, and what you need to know about it.
Exactly. So what's the closing disclosure? This is the closing disclosure right here. Is in my computer, and it is just the big receipt, right, of your purchase. So guys, when you get this document 3 days before, check everything. Check your name. You probably wouldn't even want to check your name. You'll probably go down to the monthly payment. We're going to talk about that in a minute. But check your name. Make sure that your name is correct. We're pulling this from the consumerfinance.gov. This name, I'm pretty sure, is made up. And then check your loan terms. Are you requesting a 30-year loan? Are you requesting a 15-year loan? Are you requesting a loan for a purchase or a refinance, fixed, adjustable rate mortgage? What is it that you're requesting? Conventional FHA financing? So in the next episodes, in the next season, we're going to be talking about a little bit more details about the different type of loans. But for now, we're talking about the closing disclosure. So as you can see, this form right here it's broken down into loan terms. Right here, guys, look at this. Loan terms. See, that's a block right there. Then you got projected payments right there. And then you have your closing costs. And we're going to talk about those three right now. So loan terms. Check your loan amount. You want to make sure that your loan amount is that you actually requested for, your interest rate, and you want to know if your loan has a prepayment penalty or not.
In that section too, not that I just noticed, but that I want to bring up just now is, it's got a very important question on there, right to the right. It says, can this amount increase after closing? And it gives you the answer right there is no, no, and no. And then it continues on to all the sections right below it. So that is that's one of the questions that a lot of consumers, a lot of borrowers ask as well too. Moving on to the next section, the projected payments. This shows you here what your payments are going to look like, your monthly payments, your principal and interest, and it's broken down alongside with your escrows there. So it's giving you what they're going to be, within the first to 7 years, and then the years 8 to 30 after you've paid down some of your loan, and not including your property value going up or any projected increase in taxes.
On this estimate, though, on this specific estimate, right? So for this loan, guys, what you need to understand is that year 1 to 7, something is happening, and this is the monthly payment. And from year 8 to 30, something else is happening, and this is the monthly payment. I guess this is a perfect scenario because your monthly payment goes down.
It will, and they're kind of in this scenario they're just taking away mortgage insurance, which is 8 years is about what they're estimating that it's going to take for your property value to go up, or maybe you might even refinance it during that.
So this is not basically might not be your scenario, right? So that's important to understand, right? So we're not trying to tell you that your monthly payment is going to go down. We're trying to get into that. We're trying to make sure that you understand the closing disclosure and how the parts that Cris and I were talking about is, can that loan amount change? Can that interest rate change? Can that monthly payment change? And so the closing disclosure, what the CFPB is trying to do is to inform you of everything that is involved in this big receipt of the biggest purchase that you will be making in your life. So, so going down to the last part of this closing disclosure, we're going to talk about something very important, guys. Closing or cash at closing, right? How much money you're going to bring at closing. That's important. So you need to know that. You don't want to have any surprises. You need to know specifically how much money you will need at closing. You will know this 3 days before closing. So there's not going to be any surprises. Okay, so moving on to page number 3, something we want to talk about, Cris, is
the seller's credit. Yep. Seller's credit, how much money you're going to get for your closing costs paid by the seller. This affects your bottom line as far as how much money you're going to bring. And this is typically negotiated in the beginning of the contract, though it can be negotiated later on. I would have to say from my experience, sellers do not like to negotiate afterwards, especially if it's increasing. So that means it's less money in their pocket when that they're taking from the sale.
Page number 5, guys, moving along, trying to make this fast and easy for you guys. Cris, how many times you've heard a client saying, I don't know who actually helped me with my loan, or I don't know who was my agent?
Plenty of times.
Plenty of time, right? So on page 5 of your closing disclosure, guys, you're going to have the detail information of all of the agents and all the parties involved in your transaction.
And as you can see on here, their contact information is on there, their state IDs and their license numbers, their email addresses and phone numbers are as well on there. And the last section on there, as we were saying, in that section, in bold letters there is confirm receipt, and that's where you sign, acknowledging that you have received the copy for the first one 3 days before, and at closing as well too.
So there is no excuse anymore to say, I didn't know about my terms of the loan, I was not sure. So 3 days before closing, you will know everything that's going on with the purchase of your property, and at closing you already have an idea of what's going on, right? So that's what we're bringing to you guys this episode.
All right, that's great. And just so you guys know, this is a receipt, and it's definitely not your typical receipt where you can just take it back. This is your home. It's going to be with you for a long time, maybe throughout your life. Maybe you might move or something, but definitely it's a receipt for the details of the transaction. It's something very important that you want to know and also you want to keep. Thank you guys for joining us. Please follow us on social media, all platforms, Facebook, Twitter, all that good stuff. Give us your feedback. We want to know. Let us know anything you guys want us to talk about. We'll be back here next season with different topics, and hopefully we'll see you guys then. This is Cris Del Cid signing off alongside
Nestor Gotay.